Welcome to episode 18 of the Sunday analysis series. Before we get into the analysis, I would like to ask you one question. You can leave the answer in the comment section below. What type of trader are you? I'm looking forward to your answer in the comment section below. All right, let's get into the analysis. Like always, we begin with Aussie dollar. Okay, for Aussie dollar, we had some pretty good price action. In the previous analysis video, I was expecting price to bounce off of this level, 0.6650. And I also explained that price would not bounce off from this level that easy because it was too clear. And the market manipulators do not want that for retail traders because retail traders would make money from the move. And that is what manipulators do not want. So, like I expected, again, we had manipulation. Price went further ahead and reached for 0.6700, which is a psychological level. As you can see here, we had a huge sell-off, this huge momentum, a bearish candle, and this faked some traders. Some traders entered a short at this level. Some traders entered a short at this level. I'm very certain that some traders did, and they were faked out, where we came to touch this liquidity zone that we have here. These weak rejections that we have here, it's a liquidity zone, and then grabbed liquidity, then pushed upwards to the psychological level, 0.6700. Then from 0.6700, momentum shifted to the bears, and now the bears took over the market. And eventually, they came down to another psychological level. They dropped price off to another psychological level, which is 0.6600. So here we have a 100 pip move. This is a 100 pip move. Very good move, I may say. So as you can see, price bounces off psychological levels. So if you are expecting price to bounce off of a level, I would suggest you would mark up a psychological level. I would suggest you would mark up a psychological level because if we look at previous price action, price has been bouncing off psychological levels. Like here, 0.6750 psychological level, 0.6750 psychological level. You can see we found support, 0.6800 as well, psychological level. We found resistance, bounced off the level. So as you can see, price loves psychological levels. Again, this liquidity graph that we have here, 0.6650. As you can see, 0.6650, we have this liquidity graph. And if we look further to our left, we also had some support here. So as you can see, price loves round numbers. So if you're expecting price to react from a level, I would suggest you would look for the nearest round number. Most of the time, this does not happen. Price does not come to the round number, but the majority of the time, price tries to reach for the round number. So currently, Euro USD, on Friday, we had this huge push to the upside, this huge push to the upside, this huge bullish candle. So this huge bullish candle has given me a shift in my bias because we have taken out 1, 2, 3, 4, 5, 6, 7, 8, 9. We have taken out about 9 bearish candles with one candle. So this shows to me that the bulls are in control. This shows to me that the bulls are in control. So I'm expecting price to continue to move to the upside when the market opens. And again, as you can see, we failed to break this previous low, so we created a double bottom. So I'm expecting price to break this previous high, maybe reach for 0.6750, which was also a support zone here, and now will become resistance. Then we would come find support at 0.6700. That is my scenario A. For scenario B, we might come up to 0.6800. Find resistance, then come find support at 0.6700. Anything can go. These are the markets. All we have to do is just react to what the market is showing us. We do not control the market. We only trade with the market. Okay, that's my analysis for AU. We head over to gold. Okay, for gold, in the previous analysis video, we were around this level here. And I explained that price would come find resistance at 1922 or 1925. We did not find resistance at any of these levels. Instead, we went up to 1930. went up to 1930, which is also a psychological level as explained. So we came to 1930, previous resistance as well, created this shooting star candle and then began to fall off. We began to fall off, but then failed to break below 1910. My targets, if price was to find resistance at 1925, were 1881. I was expecting price to break this previous lower low here, but price had other plans. Like I said, we cannot control the market. We only react to what the market is showing us. So price came to 1910, created these rejection candles. We had three doji candles, and then followed by a bullish candle, and then a strong impulsive move to the upside. As well, for gold, expecting another push to the upside when the market opens. So probably when it opens, we might have a little push to the downside, a little retracement. As you can see, we had a wick through this level that I have marked out here, which is 1920. We had a wick through the level. So we might also expect some support at 1920, then a push to the upside, probably coming to find resistance at 1940. At 1940, we also have a very significant support. 1940 has been a very significant level for gold as well. Because if you come to 1940, if I just hold my crosshair here, you can see that we have support, 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 support. So it's a very, very reactive level for gold, 1940. Though if it comes to retest this zone here, 1920, and then shoots up for 1940, that's a 20 pip trade. So if you would like to take 20 pips off the table, don't take my word as the sole truth, because the market can go against my analysis. So just make sure whenever you take a trade, the setup is aligning with your confluences. Make sure the setup is always aligning with your confluences. Don't just take a trade because someone else said so. Make sure you have a trading plan and you trade according to your plan. There's a famous quote by Mark Douglas where he says, plan your trade and trade your plan. So that's how you become a profitable trader in the markets. I don't have any other scenario for gold. Probably we might come down to 1910, grab some more liquidity, because we have liquidity at this area here. I can see the liquidity at this area here just because of this impulsive move that we had to the upside. So we might expect a push maybe to 1910 and then a push to 1940. Anything can go. Anything can go. 1920, 1910. So all in all, bias is bullish on gold. So keep your eye on 1920 as well as 1910. If we go to our left as well, on 1910, we can see that we had some support here. Went to find resistance at 1930 and then push to the downside. 1900 target, psychological level. For gold loves psychological levels. I think this currency respects psychological levels very well, because if we come to the previous price here, you can see 1960 here. I just put my crosshair here, 1960, resistance, resistance, resistance. So gold really loves psychological levels. So keep your eye out for 1920, 1910, as well as 1940 for targets. Okay, that's it for gold. We then head over to Euro USD. For Euro USD, in the previous analysis video, I was expecting price to find resistance at 1.0900. So around this level here, 1.0900. We eventually did find resistance, not exactly at 1.0900, but somewhere around the level. And then when price gave me confluence to enter the trade, I did enter the trade around this, when we had this pin bar formation here, this pin bar candle here. So went into a bit of drawdown, I think maximum 30 pip drawdown, then eventually we came into profit. We reached a maximum of 50 pips profit, reached a maximum of 50 pips profit. I was targeting 94 pips. But eventually we found support at this previous support level here. Created this pin bar, followed by a bullish engulfing candle. Then we had this candle that pushed to the upside, then closed back below, then closed back down here, and then we had this candle that just came to retest the level, and then we had a shoot to the upside. So I kept this position size calculator on so that you can see how I enter the trade. Very transparent with you guys, not hiding anything from you guys. So I put my stop loss at break even. I just forgot to move. I just forgot to move the stop loss. So put the stop loss at break even, and I was taken out of the trade. I would suggest you take partial profits when price reaches 50% of your target. When price reaches 50% of your target, I suggest you take some profits because things like this can happen. So you can see we came into profit very well, but then we reversed to the upside. So it's better you take away some profits so that even though it reverses and you put your stop loss at break even, you still leave the market with something rather than leaving it with nothing or a loss. Yeah, so taking partial profits is very good. So eventually we have broken our previous high. So now for Euro USD, I'm 100% confident, not 100% because anything can happen in the markets. So I can say I'm 75% confident that we are now in a bullish market. So probably we might come and retest our demand candle here because this was our black candle before we had these huge impulsive moves to the upside on Friday. So expectations that price might come and retest this level here, as well as retesting this trend line. But though this candle retested the trend line and then shot to the upside, so we might either come and retest our black candle here, or we might find support at 1.0900 psychological level. So anything can go, guys. You might come and find support at this level here somewhere. So because we have support here, right? Hope you guys can see it. We have support here. We have resistance here. As you can see, we retested with this blue candle, and then we had this bearish shooting star. Then again, we had resistance. So we might find support. Probability we might find support. So let's see how everything develops. I'll make sure to keep you updated. Like always, the updates will be posted in the Telegram channel. So if you would like to join it, I'll leave it in the description below. I'll leave the link to the Telegram channel in the description below. Okay, that's it for Euro USD. If there's anything needed, I'll make sure to update in the Telegram channel. We then head over to GU. Today I am not trading US30 because as I explained, my US30 chart froze. So last week I never really looked at US30. I also never made the analysis as promised because I was busy with other things. So I'll make sure this week I'll look at another US30 chart, and I'll make sure to make an update in the Telegram channel. So make sure you join the Telegram channel if you would like to see the US30 analysis. So from EU, we go to GBP USD. Okay, for GBP USD, in the previous analysis video, episode 17, I explained that price will find resistance here and then go to the downside, targets 1.2541, 1.2541 here, where I have this arrow tool here. So eventually we did not come down there. I took a trade here. I'll make sure to post the trade on Instagram or Instagram page. So if you'd like to see it, you'll find the post on our Instagram page. I'll leave the link to our Instagram page in the description below. So for GU we failed to even come down to this demand zone here. For GU, we actually just found support at 1.2650. You see psychological level. Sorry, not exactly at 1.2650. We were shy of that level, but this candle here retested the level, but we were shy. We're a few pips shy of the level. But then price found support exactly 1.266, 1.26660. That's what we found support. Then eventually we came up and then began to find support at 1.2700 psychological level. Wicked through the area. We had this retest here. I think this retest was just coming for stops for people that bought at this level and then put their stops a few pips below the level. This candle here came to take them out, grab the liquidity, and then use the liquidity to make this push to the upside. Because for the market to move, it needs money. So it had to grab the money from people that put their stop loss below this level. It grabbed the money, closed back above, and then had this impulsive move here. So this was just the money being ready here. This range that you see here was the market preparing itself for this huge momentum move to the upside. Okay, like for EU, for GU, I'm bullish as well. I am bullish as well for GU. And for GU, I am expecting price to find support at my significant level here. As you can see, price also retested this level here. We retested our level 1.2780. So now again, I'm also expecting price to come down to 1.27, not 80, sorry, 1.2758. 1.2758, and then find support, grab a bit of liquidity from this zone here because we haven't retested this liquidity pool here. So we might come to this liquidity pool, grab the liquidity, and then shoot to the upside. So let us see how everything pans out. Let us see how everything pans out. Market open. That's my analysis for GU. I don't think I have any other scenario that might play out. Let's just see how everything goes when the market opens. We now head over to the dollar index. For the dollar index, we had a huge fall to the downside. A huge fall to the downside. A very huge fall to the downside, as you can see. Okay. In the previous analysis video, we were around this level here, and I was expecting price to come find support at 1.102.80. So which we eventually did. I was also expecting it to tap on the trend line here. It's also expecting to tap on the trend line here. So we came 1.102.80. We also tapped the trend line, closed back above this arrow 2 here, and then started grabbing liquidity here. Then eventually we had a push to the upside. We continued retesting the trend line, and this gave me the confidence to hold the Euro USD trade. But then eventually we forgot to surpass 103.40. Targets for gold were 103, which is also 100 pips, but we failed to do so. 103.80 was the target, aligning with our previous resistance zone here and our previous support zone here. But we failed to break 103.40. Failed to break 103.40, which is 40 pips below the initial target. Then from there, we broke our, then from there we came down, then broke our trend line here. After breaking the trend line, we had this huge sell-off on Friday. NFP was what caused this move here, was what caused the huge momentum in the markets. So there's a video that I'm coming up with, how to combine fundamental analysis with technical analysis. So this is a prime example of the market just pushing price to a certain level, then changing the direction. So a lot of traders were caught lacking. Those who never moved their stops to break even, those who never took partial profits, were taken out of the trade. Because as you can see here, price is clearly showing that it's bullish. But eventually we got to this level and then we had a huge sell-off. So price was just getting prepared for the news on Friday. So the whole week it was just getting prepared. That's why you can see the whole week goes slow. It never wanted to rush and surpass this level. So it was slow, eventually got to the level, then the news just boosted the move. So I'll explain further in the upcoming video. So keep your eyes open, turn on the notification bell and subscribe to the channel. Okay, for the dollar now, after this impulsive move, what do we expect? A retracement. So now we're expecting a retracement probably at 102.80, which has been a very significant level for the dollar as well. So we have multiple weak rejections at this level. So we might expect resistance at the level. We might also expect resistance at 102.50, but the level is just too close. The level is just too close. But let us see how everything goes out, because the market is not in our control. We just have to react to what the market is showing us, what the market is telling us. We do not have to force the market in our direction, because that will lead us to losing more than we are winning. That will lead us to losing more than we are winning. We have come to the end of episode 18 of the Sunday analysis series. Thank you very much for watching this far. See you in the next analysis video.